All right, we need to talk about this massive economic puzzle that's unfolding right now. I mean, on the surface, everything looks great, right? Business is booming. But if you look just a little bit closer, there's this really strange and powerful new trend that's changing, well, everything we thought we knew about work. So let's break it down. And this is the absolute heart of the mystery. You see the headlines? I see the growing strong. Now, by every traditional measure, every textbook, companies should be on a massive hiring spree, but they're not. So you gotta ask, where did all the new jobs go? I mean, look at this. It's a paradox right out in the open. On one side of the coin, you've got everything you'd want in a healthy economy, record profits, solid growth. But then you flip it over and it's a completely different story. We're seeing fewer job postings and a major slowdown in hiring. It's almost like two different economies are running at the exact same time. So this weird situation, this phenomenon, it actually has a name, and it's one that honestly perfectly captures the contradiction we're all living through here in 2026. Economists have started calling it the jobless boom. A jobless boom? Yeah, it's pretty much exactly what it sounds like. The economy is growing, things are expanding, but the job market, it's just flat. And this right here is the crucial point. That fundamental link, the one we've always assumed exists between a growing economy and more jobs, well, it looks like it's starting to break. So that leads to the obvious question, right? If companies are making record profits but they're not spending it on hiring more people, where is all that cash going? And that brings us to the single biggest driver behind this whole thing. It's one word: efficiency, a relentless strategic pursuit of it. You see, the entire corporate mindset, the playbook, has just completely flipped. For decades, it was simple. If you wanted to grow, you hired more people. More growth meant more headcount. That's just not the case anymore. The goal now is to make every single existing employee dramatically more productive. It's about getting way more output from the exact same team. That's a massive shift in strategy. So where's the money going? Well, that investment that used to go straight into recruitment, into salaries for new people, it's being redirected. Companies are now funneling those record profits into technology. We're talking specifically about automation and AI. You could say they're choosing to invest in tools over teams. Okay, so we've got the why, this intense drive for efficiency, but what about the how? What's the actual engine that's making this whole jobless boom possible? I think you've probably guessed it by now. It's AI. So here's how the new playbook for corporate growth actually works. It's pretty straightforward. Step 1, a company needs to increase its output. Simple enough. Now, in the old days, step 2 would be post a bunch of job ads. But now, step 2 is invest in AI. Think about it. AI agents that can handle all the customer service emails, or tools that can organize mountains of data automatically. These things act like force multipliers for the existing staff. Suddenly, one person can do the work of 3 or 4. And the result? The company gets the growth it was looking for, all without adding a single person to the payroll. Now, it's important to remember this shift isn't hitting all jobs equally. The roles really feeling the pressure are the ones built on structured, repetitive tasks. You know, things like data entry, handling basic customer service questions, generating simple content to reports. Why? Because those are precisely the things that AI and automation are getting really good at. And what that means is that a lot of the traditional entry points into the workforce, they're starting to disappear. The jobs that are left are changing too. There's a whole new premium on skills that work with AI, like creative problem solving and high-level strategy. All right, so let's put all these pieces together. We've got the booming economy, we've got this massive push for efficiency, and we have AI as the engine making it all happen. So what does this new reality actually mean for the future of work? So if you're going to remember anything from this, here are the key takeaways. First, that old reliable link between economic growth and job growth, it's decoupling, it's breaking. Second, corporate investment has made a hard pivot from people to technology. And third, the new name of the game is hyper-productivity, using AI to basically supercharge the existing workforce. And look, this isn't some far-off sci-fi scenario. This is the jobless boom, and it is the defining trend of right now. And all of this leaves us with a really big, lingering question. Well, forever, we've measured a healthy economy by how many jobs it creates. But if that's not the main metric anymore, then how do we even measure success? What does this mean for our careers, for our society? What does the future of work actually look like now? That right there is the puzzle we all need to start thinking about. Thanks for digging into this with me.